Ever notice how your clueless friend, the one who thinks NASDAQ is an energy drink, somehow makes more money investing than you? Yeah, turns out being a dumb investor actually works, and it's not luck. Here's what they're doing. Buying the dip means waiting for a stock to fall, then swooping in at the bottom. In theory, a bargain. In reality, it's like seeing 50% off at IKEA thinking maybe 70% tomorrow and missing the deal, or buying just before the price drops again. Dollar cost averaging, or DCA, is much simpler. You invest the same amount each month, no drama. Think of it like buying avocados weekly. Some rock hard, some mushy, but you'll always get one just right. Not flashy, not glamorous, but dependable. And yes, the avocado shopper usually beats the bargain hunter in the long run. Go meet our two characters. Bear, slippers on, Netflix in the background. From January 2023, he methodically put $200 into S&P 500 every single month. Fast forward 2 years. Thanks to S&P 500 meteoric rise, Bear's method roughly doubled, maybe even tripled, his initial investment, all while barely lifting a finger. Bull, 6 monitors glowing, caffeine-fueled, tracking every dip. At first, he nails one bottom and makes a quick profit. Then, FOMO strikes. He buys again, this time at the peak. The market tanks. Panic sets in. Afraid of losing his previous gains, he sells at the bottom. And of course, the moment he sells, the stock shoots back up without him. This cycle repeats, buying too high, selling too low, until by 2025, his $4,800 is worth far less, while Bear's account is comfortably green. Why does this keep happening? Because the market doesn't reward stress, it rewards patience. Time in the market beats timing the market. Compounding doesn't wait for your perfection. Emotions sabotage. Fear, greed, they're portfolio killers. Bottoms are invisible. By the time you think you've spotted one, the rebound's already halfway to Mars. Bear didn't outsmart the market, he just didn't stand in his own way. History proves it. 2008 crash? Some stocks took a decade to bounce back. Crypto? Don't even get me started. Half the buy the dip memes are basically tragicomedies of people still waiting for 2021 prices. Meanwhile, the dumb DCA folks quietly stacked gains, month after month. And yes, calling it dumb sounds harsh, but if dumb doubles your money while smart loses theirs, I'll take dumb every time. So what about you? Are you Team DCA or Team BTD? Drop it in the comments. And remember, with investing, sometimes slippers beat strategy.